welcome to the already third episode of the Traders Roundtable Podcast. Today we dive into the nitty-gritty of technical analysis within trading. We've filled another amazing roundtable with 4 pretty incredible traders, so without further ado, let me first introduce our guests. On the left side we have Jip Molenaar, founder of Tribe Capital and crypto trader himself. We have Joes, trader at Crypto Rise Group and crypto trader himself. We have Lars, crypto trader as well, and Wyckoff trader. Pretty interesting, so definitely want to dive deeper into that. And we have our well-known Max, FCA and AFM regulated trader. Thanks, gents, for attending this podcast. And I'm personally really looking forward to hear from the gents what they think about technical analysis within trading. If it's true that some say that technical analysis is not very useful within trading, so let's dive into it. Jip, can you briefly introduce yourself, what you do, and what you think of technical analysis, my man?
Of course I can. So, as you said, I'm Jip Molenaar, founder of Tribe Capital, and I've now been in the crypto and trading space for about 5 years. Mainly just trading price action and liquidity, and then taking advantage of ranges, and since 2 months now also taking advantage of a statistics dashboard, which is pretty interesting to me, which also already relates a little bit to the question that you asked me about technical analysis. Do I think it's useful? Yes, I definitely do, and I think it definitely does provide an edge. But now that I'm using statistics as well, I think it's pretty interesting to see that sometimes I'm looking at a chart and I'm doing my technical analysis, and then statistics are pointing towards something completely different, for example. And at the beginning, I tried to go against those statistics, just simply trusting my trading system. And I got burned a few times pretty badly. So now I just simply first look at the statistics. If the statistics provide me with a bias for the day and week, then I go and see if my technical analysis aligns with that bias. If that aligns together, and then my execution, like I also get my triggers from my execution, then I take a trade. So yeah, I am, adjusting my system a bit. I'm still using technical analysis, and it's still very, very useful to me, especially also for the execution of trades and all of that. And if my system doesn't align with the bias of the statistics, I simply can't take a trade according to my system. So yes, I definitely do think that it's useful, and I've been talking now for about 2 or 3 minutes. So
He likes to talk.
Yes, I like to talk too much. So I'll pass on the question to my friend over here.
Definitely, but before going into use, just a quick question. Can you trade successful without statistics and with technical analysis, and vice versa?
Yes, you can.
Yeah?
Definitely. Vice versa, I don't know. I think it's pretty difficult to come to an execution without technical analysis, because I don't know where you're going to place your stop loss and entry and take profit targets. But yeah, trading without statistics and just technical analysis is definitely possible. But since I've been using the statistics, I just have a slightly higher win rate. So I earn more profits because my system and RR, they remain the same. So that's pretty interesting, definitely.
Definitely. Thanks, man. Use a little bit about yourself and what you think if technical analysis is very useful.
Yeah, a little bit about myself. I'm Joes. I trade for 2 years now, profitable. For me, TA is everything. So I don't use anything else.
Nice.
I don't read news. I do nothing.
Yeah.
Just TA.
Just TA. Keep it
Very
simple.
interesting.
And what kind of chart patterns, or what do you use as technical analysis, that you strictly have some sort of model that you just copy paste?
Kind of. So yeah, I think many forget to zoom out. So if you find the trend, it's very simple to trade.
Yeah.
But many are very zoomed in or forget what time frame the trend is. So some play higher time frame, but they use lower time frame, TA. So it doesn't work.
Do you trade with the trend, or are you more of a counter trend trader?
No, I always trade with the trend.
Okay,
But I use the trend. I use a lot of trend lines, but I use them different.
Okay.
Different than most. Yeah.
Yeah, many people, they like the touches, but it's not about the touch. So I can trade only with trend lines.
Really?
Where many hate trend lines. They say they are meme lines. They don't.
Meme lines, yeah.
Yeah, because they can't use them.
Yeah.
If you can't use them, they find a way to look back, negative on it.
That's pretty interesting. But like, if you can explain maybe or elaborate a little bit, obviously it's slightly more difficult without having a chart here to explain it. But how do you use those trend lines?
So many watch for the breakout. I use them to find the rejection.
Okay.
Like a
So the
deviation.
moment, like a deviation.
Yeah.
But people, they use the trend line and it breaks down. So now you know the trend is down. But at that time, you make another trend line for where are you wrong? From which point you switch back to the upside.
Yeah.
As an example,
Okay.
they are really trying to move the line so they confirm their own bias. So it's really hard without the chart to explain. So, but I like a deviation. I use it as where many wait for the breakout to the upside. At the touch, I just short.
Yeah.
For as an example, and you are very close to the invalidation. So you
I can.
closer than that you cannot come.
Okay. That's
So
pretty.
if you are right, RR is very good.
Smart, very smart.
Definitely. A little bit about yourself, Jus, because you're a trader at a pretty well-known crypto community. How did you get there, and how you basically ended up there?
So I always looked at a guy named his name is Gatseus.
Okay.
Okay, and he started his own Discord with Osbra. I came there as a member, and they saw I did pretty well, different. So they did not get a.
What's different?
Yeah, I have just a different style. You know, I see it, and when that's it again. You cannot explain here.
Yeah.
So they don't like trend lines. They use ranges. They like to back it up with news, and I don't use news at all. So yeah, it's totally different. So that's the way you come. Yeah, they just see me. So and they asked me to start as a trader, and like that we grew.
Interesting. Definitely interesting indeed, yeah. So you didn't scout him early enough?
No, unfortunately not. He's with the competitors. He's with the competitors.
Indeed. Great, man. I'm going to move to Lars. Can you tell a little
Yes.
bit about yourself, my man, and what you think of technical analysis?
Yeah, so name is Lars Kooistra. I go by the name of the Composer Trader on my socials. Also soon to be the founder of TCT Trading. I've been building that business, but it takes longer than you expect. Every time you want to start a business, it's like, then there's an error there, that guy's too late. All these external factors that are not in your control, they delay the process of actually launching the business. But hopefully next week is the date of the TCT Trading community. And for me, technical analysis is just everything. It's like TCT trading is all around understanding market makers. You know, the market is only going to go up if demand is greater than supply. It's all about demand and supply. And like, if you combine that idea of knowing that only the market makers have the ability to move price, you kind of come to the smart money concept area. I like to keep things rational. It's like, okay, it's only going to go up if the demand is greater than the supply, but the only people that have the ability to move price up are market makers, because depending on the market that you're in, we can talk about billions of dollars of buying pressure that will cause price to actually move up. Like us as traders, we are just retail. Like your 100K long position is not going to move price in your desired direction. Price is only going to move in your desired direction if the market maker wants to push price in that direction. Now, when we want to open a long position, for example, it's like we can just press market order and we can just press buy. But if you want to move billions of dollars in the market, you cannot just press a single buy order. Like at that moment in time, there will not be $1 billion in sell orders filling your buy orders, right? So in order to move the market, they have to manipulate price in a certain way to actually fill those massive positions to push price in your desired direction. And that happens all the time on every time frame, any asset, literally everywhere. Anywhere where the market moves, market makers are moving the market. So it was my duty to just figure out how they actually manipulate price in order to move the markets, because it's a pattern, right? And I have based it around Wyckoff, which is the core principle of TCT schematics. But just understanding that part, it's like, let's say the fundamentals are great. Let's say you're a fundamental trader and you only look at fundamentals. Well, that stock or that crypto coin is only going to go up if there are actually people buying. And it's only going to go up if the market maker decides to. And then every time you'll see the same pattern of how they make price move, how they make price like behave. And that's the edge in the market that I have. So yeah, technical analysis is everything, because you need buy orders and sell orders to move price, and they do it in a certain way that allows us to kind of step in their follow their footprints.
Interesting, definitely interesting. Thanks, man.
Yeah.
I definitely want to dive deeper into.
Yeah,
the
we're gonna dive deeper in it. It's interesting
because you told me yesterday as well that a lot of traders are moving to Wyckoff.
Yeah, I have seen. For example, I've seen since I kind of went public and I got a bit more known in the space. I see more and more people putting the dots on the chart of the Model 1s and the Model 2s. Even also people in Tribe Capital, I think. And it's so effective. I've simplified it, and it's so effective that I want people to understand it, because even if you don't want to use it, it's good to know it. You know, you can have your own edge around it. It doesn't have to be a specific TCT schematic, but understanding it, you can use your own little trend line, for example, in combination with it, like as extra confluence. But just understanding it, it just allows you to be on the right side. And then based on your preference, you can use your TA to kind of get that refined entry and the invalidation.
Yeah, we were talking about it yesterday. We went out together, but we were talking.
When we did what? What did we do?
Before that, we were just having a few beers. We were talking about it, and as Jelle said, I mentioned it. And to me, there's also a thing like that you can consume too much information with trading and technical analysis that can maybe, I don't know, complicate things. And I really like to keep things very, very simple. So to me, it was pretty surprising that traders that, I don't know, on Twitter and that kind of stuff, they call themselves profitable, and they tell people and they act like they have this profitable trading system. And then all of a sudden now, and I believe that your system is very effective and profitable, but then there's these people that are already in the space for a very long time, and now they're flip-flopping systems all of a sudden.
I had the exact same conversation yesterday with another great trader who is trading the exact same as me, because we kind of studied it together. And I noticed a lot of people in the space, also people who have their own community that they run with paid memberships. And then after me posting about TCT schematics for a few months, they switch systems. But the definition of a successful trader is you have your own system in place. Like, I will never make fun of other people's trading styles or systems, because there's so many ways that you can be profitable. You don't have to trade smart money concepts. You can trade trend lines and be profitable. It's just you have your own system.
Most important thing to stick with it, right? And not like
100%.
to...
Exactly. And if you're profitable, why would you switch systems? That's
didn't
the
make
question.
any sense.
So it's kind
We were
of...
talking about it yesterday.
I'm always, happy to see people learning, and evolving in their skill set. But a lot of people started to switch, and I'm like, you're exposing yourself a bit.
Exactly. They are exposing themselves, because they're basically saying that they're not profitable. Because if you're profitable, you would never switch system. Obviously, you can add things to your system to make it even more profitable.
Exactly.
But you're not going to flip-flop your entire system if you're profitable. Like, didn't make any sense. But it is very interesting, obviously.
We're going to dive deeper in it
100%.
later
Definitely.
I've got one quick question. When you talk about, like, let's say market makers, and you've got like this kind of eye on who's moving the price, I'm not that into crypto, so I'm not really 100% sure what the buying powers is. When I look at Forex, I know you're looking at 10 figures to move the percentage by a tick from a professional aspect. When you say market makers, or when you reference they, who's moving the price in your opinion?
Yeah, that's why I'm called the composite trader, because Wyckoff is just the last name of the guy that kind of invented the core principles of the pattern that I use. And he referred to the market maker as, just look at the market maker from a guy, just a single guy who's behind his PC, who has the ability to move price. And he called him the composite man. And since I am understanding the composite man, I rebranded to the composite trader. Also has that nice TCT effect to it, which is easy to use. But if you have to give real definitions to market makers, I would say they're just big institutional firms who also run a lot of algorithms in the market, especially in Forex and in like NASDAQ and the S&P. It's very like algorithmic driven. So I wish I knew exactly how they make price move and how those systems exactly work, but sometimes you don't have to know how the boat actually drives, but just need to know how to.
But no, that's why it's kind of
manage it.
it's kind of interesting. Like when you look at crypto and you're referring to, like, let's say these market makers, and you've got like this model Wyckoff, super technical, very simple schematic. Once you've posted next to your computer screen, you're like, okay, hey, I got to look for these things. At which moments do you, let's say, step away from your model and say like, okay, hey, the market makers are taking control, or like, oh, this is something that's out of my vicinity or out of my model, and it's these institutions, in my opinion, that are like taking over price action or manipulating price action.
So TCT is not just a Wyckoff schematic. Also, I'm launching a mentorship very soon, just on YouTube for free, so everyone can see what I or how I trade effectively. But it's not just an accumulation or a distribution schematic. It's simply also understanding market structure, understanding ranges, understanding liquidity. That's the core foundation of a TCT schematic. And there's always market structure. There's always a range. There's always liquidity somewhere. So you kind of just go from macro to micro. So you identify the entire chart naked. Are we trending up? Are we trending down? Are we ranging? And you kind of dissect it down into the lower time frames. And then sometimes you have on the low time frame, in an area where you're already expecting, for example, a lower high, that's where you'll look for a TCT schematic. And if you don't have the right confirmations, you don't take it. But in general, you build the chart just based on market structure, liquidity, ranges, and then you use TCT as just that entry trigger, the entry confirmation. But building context, where are you actually on the chart? Like, what is price doing? That's also around TCT, and that's always the case. You can always, layer or do TA on a chart. So just TCT itself and Wyckoff itself is used for the entry confirmation, and you have a clear invalidation and a clear take profit. And if you don't have that, then I will not take the trade, But in general, just laying the foundation of where you kind of expect a lower high or a higher low, or where you expect price to react. That's just normal TA using like smart money concepts.
Cool. No, it makes sense.
Makes sense, definitely.
Yeah.
Max, a little bit about yourself, my man. But I don't want to ask you what technical analysis is in your opinion, but how do you get like FCA and AFM regulated? Because that's the trigger, I think, for other traders that are listening.
That's kind of where the interesting aspect is at, right? You start as a retail trader, you get a little bit of experience here and there, whether you're trading private capital, proprietary, and you get experience with the charts. But when you do regulation-based, so either for, let's say, so my AFM regulation is with a Dutch fund, and it's actually very little trading, a lot more compliance. So you're more oriented with risk management. You're very oriented with, client management as well, which is very, very interesting. You go through 22 different exams to get your FCA. It's like, I think, 860 pages of theory that you have to go through. And you're going not only just like, it's very, because the assumption is that you know how to trade, right? So you're not going to be taking these exams if you don't know how to trade. We're not testing your trading capabilities. You go a lot further than just your trading capabilities. Your psychology gets checked as well. That you're not going to fat finger the entire portfolio. Very important. Even if there are, let's say, things in the portfolio that will prevent you from doing so, you need to obviously stop getting to that point that is even capable. So FCA, that's UK based. That is very, from residing in the Netherlands, it was mainly just understanding lots of UK different laws about how they work and their regulatory bodies. Whereas AFM is, I can't say really too much about, the regulations and, what my involvement is. But long story short, it's mainly position management. And that's kind of the most important aspect of your entire certification, is that, one, you stick to, let's say, the type of fund that you're doing. So you've got up until 100M, then you have a light vergunning. So AIFMD in English, AIFMD light. And then minimum investment, 100K per client, all that good stuff. But aside from that, under that, you enter very gray area, and that can get very, sketchy very quickly. So you want to make sure that as a retail trader, you don't surround yourself by people that do that, or, you're not influenced by, communities that are closer to that, let's say, ice or that thin threaded line. So yeah, that's kind of it in a nutshell.
But do they also, for example, they basically want to know that you can trade and you're capable enough to like manage funds. But do they also, for example, test you on things as TA and these kind of things?
No.
No?
No.
It's just like you know how to trade and how the systems work.
Yeah,
But
so
they don't test you on like technical skills.
there's no like exam where you get like a little sticker like, oh, this guy knows how to, do some technical analysis.
Videos of where's price heading next.
Yeah. The guy that has a little pen and starts like whistling, and it's like, all right, cool. Like, for a commercial aspect, great.
Yeah,
that
definitely.
works. I've been implementing those videos as well. They get great traction. But from, let's say, when you go for your certifications, it's actually very, very little trading, because it's just a general assumption like, okay, hey, we've got this guy for a fund. We've got this guy for, So with FC, I did direct market access. So that's why it's a very interesting conversation when we're talking about market makers having been in the pool of market makers and being capable of making the market. You don't look at charts, right? You're not looking at, oh, this guy knows how to do technical analysis. It's actually all psychology, right? That's the most important thing they check. Is this guy, does he understand risk management? Is his psychology in check? Those are, I think, the two biggest things. And then you go into like a whole theory of how does he manage clients, positions, risk. They even ask you for like, what's your routine? Right? I have to show them how my week looked like with FCA. All right, I woke up at this.
You made it a week in the life vlog for
not even like on purpose. I had to tell them, oh, this is how my week looks like. I got to explain. I don't do any crazy stuff.
Sometimes.
Like yesterday.
Except last night.
No, it's just more, is this a sane person? Are they tangible enough to, be put under pressure, and do they not crack under pressure? I think that's the most important aspect.
I can imagine you also had to provide a track record, obviously, right?
You have to, you go into sim phase, okay, that's maybe the only thing, but they don't test your technicals, right? You go into simulation phase, and that is then obviously where they test your capabilities if you're not just bullshitting around. And that's obviously where you get the credential. So it's like either a 3 month.
They test you on the results, not like on how you do your analysis.
The results. So
sense.
it's like, hey, does it come in line with the expectations he said? Like if I say, I'm doing 10% a month and I'm only doing 1, they're gonna be like, yo, you're
Makes sense.
not made for this. But if you just manage expectations, like, hey, I can do an X percentage every so often. That's kind of the reality of trading. And you meet that criteria, they'll give you a nice little stamp, and you're allowed to continue.
That's great. That's actually great. Amazing, man. Guys, to dive a little deeper into the technicals, because I want to ask you something. But Jip, in our last podcast, he mentioned indicators are basically worth shit. What do you think of that? Because you just mentioned like technical analysis indicators are like worth anything for me. What do you think of these quotes?
Depends on what you see as indicators.
What do you see as indicators, Jip?
For example, like RSI, stochastic RSI, those kind of indicators.
Yeah,
I think like the
I
basic
agree.
indicators.
Yeah.
Not indicators like using a trend line tool or anything.
No. People use many indicators to confirm their view.
Yeah.
So it's looking for confirmation, but it's the same with news. If you open Twitter, you only see people try to find news that fit their bias.
Yeah, or they blame news for certain losses and that kind of stuff.
99% it's in the chart.
Yeah.
And if it's wrong, you did look wrong at the market.
Yeah.
That's my opinion.
Yeah.
But many people are like searching for that one unicorn indicator that basically provides them always with like the good entry and the exact right point to the unicorn indicator. Is there any indicator you say, hey, this is definitely something, or a strategy you need to use this?
No, perfection doesn't exist for me. So I want the meat of the move. I don't need the whole move. If I know we go down, I just enter. And of course, you want to be as close to your invalidation as possible. But if I'm sure we're going down, why would I not enter?
So you're more going for the high RR trades?
I try to make it as good as possible, of course. But if I'm late, because crypto is 24/7, you wake up, you are late. But I use liquidity a lot. That's my point why I exit. We can go lower, we can go higher, but I don't have the information for that.
And what do you mean with like liquidity? I use liquidity a lot. What do you mean with that?
Yeah, heat maps.
Nice. That's
Heat map.
good.
Yeah.
That's good stuff.
Do you use it as well for like the Forex market? Because you guys are like crypto traders and you're like the only Forex trader.
Yeah.
I trade Forex and
Yeah?
commodities.
Okay.
And, here and there indices. It's all over the place.
That's great.
Yeah.
But do you use it as well, Max? Heat maps?
No, I like that. That's why it's so interesting to also sit with you guys with crypto, because with crypto it's open book. You know, you can actually see. That's why people also find it, I would say, considerably easier to trade crypto, because you're given more perfect information. Let's say heat maps. You're given the order book. You're given your your DOM and the depth and everything and what's being transacted here and there. Whereas with Forex, it's kind of being gate kept. Either you got to pay a lot a month to get that data of, let's say, you trade CFDs, which are contracts with your broker. You go to, you actually want to execute on the market, and you start looking at, the CME, the Chicago Mercantile Exchange, and there you got to pay for the data to see what's being transacted. And, on CFDs, you got pips. And then on, let's say, the direct market, you transacting ticks. Maybe what you might know with futures, with NASDAQ as well, you play in ticks. But yeah, definitely to come back to the question, kind of straying away. But heat maps, super informative. With Forex, we have the same, except it's just very, very expensive to use that data because it's not publicly available. At least the ones where you want to execute on as well. Yeah.
Makes sense. And Lars, you just mentioned like that you trade basically all the assets. Do you change your way of doing technical analysis? Do you change your analysis based on the asset or trading pair you trade?
So for crypto and commodities and Forex, it's literally the exact same. They kind of move the exact same, but then Forex has just this extra edge of it loves like session liquidity points. Like it truly loves like London taking Asia or New York taking London. You have that way less in crypto because it's not like a session market. It's just 24/7 open. And then the only difference with indices like NASDAQ, for example, is it moves faster. So I confirm always my entries with like market structure and break of structures. Sometimes you don't get break of structures, particularly in NASDAQ on the lower time frame, because in order to create market structure, it needs some time to make that zigzag point in the chart. So you can use like a fair value gap instead or something. So that's the tiny difference. Maybe change the break of structure to maybe a fair value gap break or something like that. But the core principles stay the exact same because it's all based around market makers and being able to move price. And also coming to your heat map point, oftentimes I just identify liquidity on the chart, like no heat map needed. And then there's this one guy that has access to heat maps and he's like, oh yeah, there's actually like a billion. Like he can see the exact data. I can see there's buy side liquidity above and he'll be like, oh yeah, it's like a 1.1 billion in orders, But yeah, that's technically the same, slight difference in indices.
Okay, and you three guys basically are pretty successful and also pretty enthusiastic about heat maps. What do you think of heat maps?
Yeah, like Lars said as well, I usually just identify liquidity by looking at the chart, and then afterwards, kind of often on Twitter and that kind of stuff, you see the heat maps coming by, but then usually I just identify the liquidity by simply looking at the charts. But it is definitely actually just easier using heat maps or order books to identify those pools. But yeah, I just simply do it by looking at the chart.
But can you easily access heat maps?
I've never tried, actually, to be very honest.
Yeah, it's very easy.
Okay.
It's very easy. Just, you have a payment you make.
Sorry, you have
Just open Twitter and you see it left and
Yeah.
right. But people forget about it. So as an example, if Bitcoin goes to 65K and there's big liquidity at 65,500 for a few weeks, they just ignore it. They go short from 65. So for me, the RR is very much higher if you just wait for the sweep of the liquidity. So it's not for lower time frame. I don't use it for lower time frame. It's more for what kind of range or where's the trend for me? Where could it flip? It's just like that.
Yeah, makes sense. And you say like a lot of people are forgetting about it. Why do they forget about it? Because there have to be a reason, right?
Emotions.
Sorry?
Emotions.
Yeah.
It's always like that.
Okay.
I don't know why. They keep me play it. So we go up and they are all bullish. And once we go down, everyone is bearish. And for me, it's just liquidity.
Yeah, that's something about like
If
the
you have
crypto
a
market,
higher
right?
time frame view, you don't need to switch from medium liquidity or lower time frame. It just helps to make your RR better.
Interesting, definitely interesting.
I think it's a lot about FOMO as well. Like people see a crazy pump on the Bitcoin price, for example, and it's like they look at the chart and they're like, oh, I wish I was in this pump, or how could I have been in this trade? And it's like that's the wrong perspective. Like you should have your edge, and then if there was an edge, if there was a confirmation using your edge, and you could have taken that trade, and then you had the pump, that's amazing. But if that was not there, don't worry, just wait for your confirmations. Like that pump is there. There will be many other trades. And oftentimes you don't need a big pump for a good risk to reward. Like sometimes you have these guys posting percentage gains and it's like, that does not matter. It's like, where was the invalidation? Where was the take profit? It's all about risk to reward. But I think that's also a topic for later.
Oh, definitely indeed. And actually, to stay with you, Lars, you are, I think, the only trader over here that uses the Wyckoff method, and we talked about it yesterday. A lot of people, or a lot of traders, are changing to the Wyckoff method. Yeah. What's the reason, the exact reason for that? But is it like something that is very trending, or is it being pushed by someone?
Well, I think most people know it in our community because I've been posting about it for like 4 or 5 months now. But the thing is, I went public. I kind of started on YouTube, but I just made post-trading analysis videos on YouTube because I was really lacking in journaling on my trades, because typing and making like a good sheet for like good journaling, it took time. So I was like, let me just make a YouTube video talking about my trading day, showing which trades I took and then what went wrong, what went right, and how I could improve. And I just started posting that on YouTube as my own logbook. And then that started catching on to people. And I was posting the setups also on X now. And people are like, oh, this pattern, like it happens all the time. Like it's everywhere. And I'm like, oh, yeah, but it's not like a strategy. It's like the way the market moves. And if the market moves, you can see somewhere somewhat of a Wyckoff schematic. But the problem with Wyckoff is that the core, like I've rebranded it to TCT because Wyckoff schematics itself, if the people search it up on the internet, it's too complicated. You have many different phases. You have all these letter combinations of SR, ST, phase A, phase B, and it's very, very complicated, almost impossible to trade if you want to look for an actual an actual Wyckoff schematic that he made in the chart. Like it's basically impossible. But the core foundation of Wyckoff is that you have a range and then you deviate your range. So a model 1 Wyckoff accumulation is that you have a range and then you deviate your range low once and then you deviate it twice, where each deviation goes lower than the previous one. That's basically what a Wyckoff model 1 accumulation is. And the reason for that is, if you think from a market maker perspective, they deviate that low to sweep all that liquidity, to fill their orders, because they need to manipulate price in that way to fill massive positions in order to push price in the other direction. And then you can combine it of, oh, people have stop losses there, and you can combine that with their breakout traders who get trapped on the deviation and all that stuff. But that's the foundation, just a range with 2 deviations where each deviation goes lower. And then the difference between a Wyckoff Model 1 and a Model 2 is that the Model 2 doesn't have 2 deviations, it just has 1 and then a higher low if we're talking about an accumulation. So I made, using like my market structure rules and my range rules, kind of a concept of looking at ranges, looking at those deviations, and then actually being able to trade them very simply and very effective. And then it happens everywhere. So I post videos, every day of like, hey, I took this trade, hey, I took that trade. And people are like, he's taking the same trade over and over again on just different times, different assets. And I'm like, yeah, well, that's basically it. Like, that is what I'm trading, TCT schematics. And then that started kind of expanding and people started trading it, realized how effective it was and how often it appeared. And then it's kind of taking off. Following grew pretty quickly. And people are starting to catch on now. So it's very interesting.
You basically push it.
Yeah, I basically pushed it on, at least in our circle for now. Maybe there's someone else that I don't know. But the thing is, oftentimes you'll see that many people trade kind of the same, but they just name it differently. Like You have also something called a 3-drive pattern, which is also like a famous trading pattern where you have 3 drives down. Well, that's basically a Model 1 accumulation where you have 2 drives down and each deviation going lower. So it's kind of the same as some other smart money concept patterns that they're out there. Sometimes I see Yip posting a setup and I'm like, well, that's a TCT Model 1 accumulation, but he looks at it from a different perspective. He names it differently, but oftentimes it comes to the same conclusion.
Yeah, I don't want to give him the fame, so... No, it's what I said as well in the last podcast.
Mm-hmm.
Like, there's so many different strategies out there,
Yeah.
but I think 90% of the strategies all come down to the exact same thing.
All the same.
Mhm.
It's all the same.
Yeah, just they're branded differently, named differently, and that kind of stuff.
Yeah.
And then there's obviously exceptions. I think your strategy, for example, when I hear you speak, is fairly different compared to what we trade, for example. But like you said, we basically have a very, very similar system. I
Yeah.
think basically almost the same. But yeah, it's just named differently, and yeah, you draw differently on the chart and share different charts. But at the end of the day, if you have a profitable system, I think 90% all comes down to the exact same thing: liquidity, market structure, ranges, all that good stuff. So,
But you mentioned that the system of use is like fairly different from the system you guys are using, or actually not like the exact same system, but a little bit similar. What's the biggest difference between your systems?
that's an interesting question.
Between our systems or our systems?
Your systems.
Maybe that's one that you can answer.
Well, I still find his system pretty mysterious, you know?
It
Trend
is kinda
lines, the
mysterious.
deviations, and also I haven't really seen a chart from him. Like if he has a chart and he shows me a trade he took, I can kind of get a better grasp of his style. But yeah, if he says he maybe trades deviations, like deviations of the trend lines potentially, it's like a deviation is oftentimes a liquidity grab, and then you're also in that same liquidity game, different approach.
Yeah.
You know?
True.
Makes sense. What do you think is the biggest difference?
Yeah, I don't think there's much difference. It's
Okay.
just I I use trends to come closer to the invalidation. That's the big difference. So my RR is most of the time bigger than most of the people.
That's maybe the biggest difference. That he's more of a trending trader and we're more of a ranging trader. Maybe that's... if I can
You
think
have
of a thing.
buy zones,
Yeah.
and of course I have them too.
Yeah.
But if you can know where the invalidation exactly is, you are closer to
Yeah, of course.
your stop loss is very, very small. So I don't
What
need...
would, for example, be like your average risk to reward setup?
1 to 20.
Imagine, bro.
Yeah, 8.
Sick.
A 1 to 8.
That's very nice.
Yeah.
Class.
And that's
big.
it depends on how active I am. I can in a small move I can make a lot of money, but if it's very volatile, you will be. It depends on the coin also.
Yeah.
So I try to have bigger stops now because I don't like to like before 24/7 at the screen is not my time anymore.
And now, what would your like the combined win rate as well? You combine win rate with risk to reward.
Yeah, but the win rate also is very... I have a different style. So I use 2 charts. It's for me for crypto, Total 2, and USDT. My win rate on those 2 on higher time frame is like 80%. So if I just would trade like that, I have a very high win rate. But of course, we overtrade. We still do it. Because, sometimes you miss something. Crypto is very annoying. So the moves in the night... Yeah, it's
You
like,
wait all day, and then Asia takes your setup, and you wake up in London, and it's like,
yeah, and it wicked you out, or no, I never use limit orders, but yeah, it's gone. Your whole week work is gone in like seconds.
yeah,
And that's a big difference.
okay, interesting.
Definitely. And for you, Max, because the guys are mainly crypto traders, you trade basically all kind of assets. Can you learn something from each other? The way, for example, Yip does his analysis on the crypto assets. Can you learn something and put it into your...
Can I learn something from you? From crypto analysis? No, I definitely could. I think that's... I've got a couple years of skin in the game. Nearly 7 years just trading ever since. I could have opened an account. I think what I've come to realize, and like what Yip just said, there are numerous roads to Rome. And I think that's the core concept of this roundtable as well, is that technicals, to each their own, right? Technicals for me is just the way that you see the chart, kind of the way that you're dissecting this Rosetta Stone. and the way you decrypted it for yourself to give you that edge, whether that's Wyckoff, whether that's trend lines, whether that's more range deviations, all good. You know, you can definitely get insights from it, but I just try to get really close to the chart itself, close to, you know, what everyone calls liquidity, and kind of see how that works. But it's very interesting to see all of you guys with different perspectives, and it can always open up a couple doors. So
it is definitely, and that's also what makes it interesting, right? Because a lot of traders and a lot of people that are listening this podcast are always searching, okay, what's the best for me?
what's the holy grail?
Indeed. So what's the best for me, and what's the most profitable for me? And you guys are all like training traders as well. So how do you, for example, Jip, if someone comes to the community and asks you, okay, what do I need to do based on like the technical analysis? What do you advise him or her?
Like I try to not advise them anything, and I like Max said as well, there is no holy grail and there's no golden nugget, and no one has it. I truly believe that. So that is also why I always struggle with the kind of people like ICT and those kind of guys. Like
Wild.
yeah, I get very frustrated talking about them because they act like I'm a bit hungover.
Yes.
So it's a combination of both here, but
Bowling the fit.
ICT traders.
no, but it is kind of frustrating seeing people act like they figured it all out.
It is.
They have the holy grail and the golden nugget.
Yeah.
Because there is none, in my opinion. What I can do is show the people that come to the community or watch my YouTube videos or go on my Twitter page, just to show them what I'm doing and what works well for me. And I know that over a longer period of time, my trading system is profitable. We talked about it yesterday as well. Like the past 3 months for crypto, for my system at least, were pretty rough to trade. So I think I played around break even. But a year ago or 2 or 3 years ago, I would have been freaking out, like, oh my god, my trading system is not working anymore. I maybe have to flip flop to Wyckoff to become profitable again. But now I just knew my system over a period of a year or 6 months, 7, 8 months is going to be very profitable. Like I will gain at least 30 to 40% a year, and that is massive. If you compound that over 10, 20 years, you're going to be a millionaire no matter what. So that gives a lot of peace of mind. And then in September I had a decent month again, and I gained 8% on my account.
Casual.
So yeah, just already getting closer to my yearly goal. And yeah, that is what I can show people and can teach people, but I can't tell them that my system is going to work well for them, because there's a lot of things that come with it, right? For example, you were saying as well that you don't want to be behind the charts 24/7. You maybe have a kid or a family or a girlfriend that you want to hang out. Some people, they can sit behind the charts 24/7 and they can trade the 5-minute time frame. And that is something that is different for every single individual out there. So there's some people that want to learn my system, and they do learn my system and it works well for them. There are some people that come and want to learn my system and it doesn't work well for them because psychology is getting involved and all that kind of stuff. So yeah, I can't tell them what they need to study or what they need to learn, and that is also why I struggle with the people that act like they got it all figured out.
So what's more important? If I were talking, of course, the technical analysis is very important. You need to know when to enter and when not to enter. But what's more important, doing the analysis or keeping your emotions and psychology in check?
100% your emotions and psychology. Just having a system and sticking to that system. And what comes with that system as well is also your risk management. It is part of the system, and sticking to that, and that comes down to psychology and discipline and all that kind of stuff. That is way more important than having a profitable system. I know traders that have a more profitable trading system, higher win rate, higher RR than I do, but they're not as disciplined as I am. And that separates the profitable from the unprofitable traders, 100%.
What's your take on that,
Yeah.
Juice? Yeah?
Yeah.
Yeah? Exact same.
You don't
yeah?
handle your emotions, you will not make it.
Yeah.
100%.
It's impossible.
But I think, if I can just kind of nudge in there for a second, I think what's the most important with that is it's all mental. Your edge is fully mental. Why do you think, big institutions, FCA, AFM, why are they asking more of a psychological check rather than, your technicals? Plays huge factor. And you see that with anyone that's, let's say, hopping from one strategy to another strategy, or claiming to have found the golden grail on whatever platform. They don't show any consistency in who they are as a person, or how they keep their emotions in check. I got people that join your community really quickly, and they see the edge that you trade, but then you hear their stories that they do like -3, -4% for Forex. That's a lot in, let's say, a day. And then you're like, oh, what's the biggest factor of that? It's their emotions, right? You know, you have a system, any system works. You have your data that can play out, but then emotions, 9 out of 10 times will always be the case for your losses, in my opinion, as well.
And how do you keep your emotions in check?
That's a good
Going
question.
to the gym.
Going to the gym. No, it is right. You know, I've come from a point that I was also at the trading floor at BrightFunded for 3 years, and you are behind your charts for so long that obviously you're looking at paint dry 9 out of 10 times, and you're gonna take a trade just because you want to take a trade, and you're like, oh, shouldn't have done that. So it is often enough distractions, seeking distractions, keeping yourself busy. Also, one of the main reasons why I started a community and I started doing content, and I was like, oh, is to get myself away from my screens, actually, right? If I know that, okay, hey, I'm waiting for something to happen on my screens, it's not there, you know, go to the gym, take a walk, touch grass. It's very simple, actually.
It's just like getting distracted from the charts and being forced to not look at a chart. But what made you decide to go to BrightFunded? Because if you go to BrightFunded, it basically forces you to be behind the charts 24/7 almost.
So I think, right, with everyone's next step in their trading career is always like, oh, I want to get an office. I want to go somewhere. I want to, you know, dial down, get more screens, become a lot more profitable. You think that all the tech is going to help you out. Still kind of my issue at the moment. But regardless, when you go to BrightFunded, I wanted to really get some hours in, really get just that 1,000 hours in. You know what they say, get 1,000 hours in your craft and you'll see that you're going to be at least a little bit better before you started. It put me in a scenario that you're surrounded by very, very high achieving individuals, whether that's in my own community or, you know, for me, it was actually to get closer to the veterans, the guys that have been on a trading floor, throwing those, you know, little pieces of paper around and actually trading in the pits, the trading pits. And that gave me the opportunity to go professional. So, you know, with regulations. So it was mainly to kind of go through that door, the professional aspect and just a little bit closer to the actual market.
Yeah, makes sense. Is this also something you admire, Lars? Going to, or basically get an office at BrightFunded or whatsoever? Or what's your next step?
I would, an office. I would love to just have a separate room for just work, you know, if that's in like my own apartment or not. Right now, I don't have space in my own apartment for like a particular office, but I would love to just separate work from my room in general, because now my setup is in the same place I'm sleeping. I don't like that. I like to have that separated, just a room for sleep and a room for work. So, an office would be nice, or just like a bigger place where you can have your own separate little room. But also coming back to that first question you asked Jip regarding, you know, and indicators and like the holy grail, if there is a holy grail, I also tell people like there are so many ways to roam. Like there's so many ways to be profitable. You can use software, you can use Excel charts. I don't know if you guys know that, but it's just raw data. You can have trend lines, you can have smart money concepts. And I just tell them like, hey, if they join the community, if they see my profile, I'm like, okay, do you like my style? It's a bit more patient. You know, you need to wait for breakout charts, you need to wait for confirmations. It's not like divergence indicator and just go press market order and quick stop loss. It's more on the patient side. So like, if you like that style, if that's your preference, then combine that with liking my way of teaching, then yes, take time to study the craft that I am exposing to the people. But it's coming also back to ICT. It's I always have to give because there's a big difference. Okay, we can get into that after this. There's a big difference in being a good teacher and a good trader, because you can be a very good teacher, but that doesn't mean you're a good trader, because that's the difference in psychology. You can understand the TA, you can understand the charts, but the execution is not based on TA. TA doesn't tell you about risk management. TA doesn't tell you about the psychology of being in profits and then seeing the profits disappear. TA doesn't tell you about how you will feel if you lose back to back to back and how you will doubt your strategy. TA doesn't tell you that. That's all psychology. So you can be a good teacher and teach people the TA, but then actually being a good trader, it's a totally different aspect. And ICT, like the concepts that he has taught, I know many ICT traders that just trade their certain edge that they have been taught by ICT, and they're very profitable. So I always have to give credits to, you know, people teaching good TA. Now, if he exactly says what he say he is, that's a different story. But at least, you know, some I do give some credits, because I know many traders who are ICT traders who are very profitable, you know. But it's interesting now, circling back to being the good teacher and being the good trader is something I struggled with a lot, that I was already teaching people, but it was that I had my TA in check. I saw other people's TA and I was like, damn, I swear to God, my TA is better. Like, I have better refined entries, I understand the market better, but the results were not in line with my understanding of the markets. Because right now I'm literally approaching exactly 1 year of profitability, straight up profitability.
Month over month?
Yeah, month over month. So the rule I set is I average at least 5% in a week. And then 3 out of 4 weeks, if I hit that goal of 5% a week, that's when I'll call it a profitable month, you know?
And what do you measure this on? What do you trade?
5% of a total account net gain. So if my account was 10,000 and I make 5%, so 500, then that will be the 5% net gain in that week. And then over compounding, it's like it grows quick.
And what about, let's say you say you've done 1 year of profitability. Is that on one single account that you've just been managed to?
It's a bit different, because then I got a prop firm account, and that allows you to grow your capital faster in the beginning. And then slowly I kind of pulled back from prop firms, because I just used it to build some starting capital. And then I have my own, I use Owanda for like Forex and gold. And then I use more like crypto exchanges to trade crypto.
Yep.
But in the beginning, obviously you can calculate of like, okay, you make a certain percentage the prop firm, you take that into your own capital, and then you start trading your own capital. And that way kind of the thing grows. But it's always been 5% based on the capital that I've been given, you know? So if that's 100K account.
Per week.
Yeah.
That's big.
Crazy.
And the thing is, that was my struggle with a lot of people, because I have been posting it publicly on YouTube and on X for 5 months now. You know, you can literally fact check it. You can just go on the YouTube and you can see the entry, you can see the screenshot, and you can see me talk about it. And it's the same concept over and over again. So after a while, people were not even needing to see my actual trade in the MetaTrader or in the Owanda anymore, because they're like, yeah, it's the same, it's the exact same setup. Obviously he took it, he's been taking it for so long. But it's you need just a few high quality setups. Like, there are certain setups where I'm like so confident that you just go double down on the risk, and then you have like a 1 to 3 RR, and you can make 5 to 6% in a single trade. Well, that's already your weekly goal, right? So it boils down to being patient for those confident setup, and then
What do you stop if you hit your goal?
I don't stop. I still trade, but I will just literally only, if I'm like 99% confidence in the trade, I'll take it, you know? But I don't stop trading when I hit my weekly profit. I just slow down. Maybe I have a day off. Maybe I'll be more active with the community instead of trading myself. But I don't stop when that.
How much are you up then year to date if you do 5% every week?
How much am I up today?
Year to date. So from this year, yeah.
In total amounts of money?
No, percentage. No, you don't need to
Talk about real numbers right now.
disclose numbers if you want. You can disclose numbers. No, but like,
no
you know,
taxes.
right. No, but at 5%, that's why I'm scratching my head here, struggling to do like 2% a month. And you're
So
There is a holy grail. So there is a holy grail.
clearly
Yeah.
I'm doing something wrong here.
I would, yeah, it's still not a holy grail, because it's not 100% win rate, you know? It's just a high quality setup with a certain risk to reward that has a decent win rate. And then over time you make money. But there are definitely points in time where it doesn't work. Like a holy grail is like, oh, this works every time. That's it in my eyes. The holy grail is like, oh, this works every time. But it depends, because you can compound that 5% each week on your own account. But I have been investing almost all the money in crypto. So all the profits literally.
That's advice from Jip, I guess.
It's non-financial advice.
Okay.
But I have been investing all the profits in crypto. So that 5% is not compounded because every profit I made, invested it back in crypto.
All the bags are underwater, so profits are gone again.
And then 2024 came, and we have been ranging for 200 days. But yeah, do the math. It's around 5% a week.
Yeah, that's what I got.
That's a lot.
Yeah,
it is. It is.
Yeah, but it depends, of course, of how big is your account. So I have an investment account and I have a trading account. My trading account is like 10% of the total amount.
There you go. Yeah.
Okay, but I'm aggressive. You know, I in the down market the last 4 months I made like 5x.
Yeah.
So
That's huge.
But I trade with the capital.
Yeah.
So many have a big trading account, but they never go all in. So why is the money in the trading account? I mean, it's active money.
And the bigger your account grows, obviously you can run into liquidity issues because I trade lower time frames, lower entries. Lower invalidations means bigger position sizes.
You trade on MaxC, right?
Right now on MaxC. I was on Bybit, but they banned derivatives trading here.
Yeah.
Liquidity on MaxC is whack, man.
Terrible.
Bro, I traded there, and at some point I was running a decent position, and my stop just didn't get triggered.
No,
and I came back home and I lost a lot of money, and they never paid me back.
That's
crazy.
That's where I was going with it. I'm trading on MaxC. I wasn't gonna give them exposure, but you can run into liquidity issues because if you want to have like a 2K risk on your trade and then you have like a massive position, it's like, well, how are you gonna fill that? I don't want to press one market order because then the spreads, the slippage, and if you can even get filled properly, especially during lower volatility times, it's harder.
Yep.
So that delays the process of the compounding effect, but because now you reach a point where, maybe you can only take that with a 0.5 risk of your total capital, which has effect on the 5%. But on average, it's 5.
Yeah, makes sense.
Is it not for patterns? You talk about your pattern a lot, so it's very nice. But if you don't know where to go, the pattern doesn't matter.
I always tell people it's all about building context. So I'll only trade the pattern.
Yeah.
On a place where I am expecting a rejection. And that's also the struggle that most people had.
Yeah.
Because they will just be on the 1 minute, see the pattern, and say, well, it doesn't work. And I'm like, yeah, well, of course it doesn't work. Look at the bigger picture.
Yeah.
I always, especially when I'm doing those post-trading analysis videos, I always start with, okay, let's build some context. And then I'm be like, okay, well, I was expecting a lower high here because of the higher time frames. And then I dissect it to the lower time frames and you get that entry confirmation.
Yeah.
But that's also what I'm going to teach people the most. It's like, let's build context, because if you know where we are at on the chart on the higher time frame, then you can look for whatever your preference is in the actual entry trigger. If it's a trend line break, if it's a TCT schematic, if it's PO3. I see you using like those
a lot,
manipulation things.
Makes sense.
Preference.
All right, thanks, man. Actually, I'd like to conclude it already. We're more than an hour in, but before we go into the final round, I'd just like to ask you guys for an advice, because if somebody would like to start with trading, he or she would want to get funded, for an example, and want to get started with just like the basics. What do you advise him or her, Jip, from a technical analysis point of view?
Yeah. Okay, I can definitely advise them to join Tribe Capital and buy the mentorship at Max. And then,
No promotion. Yeah.
And then buy a platform account at BrightFunded, and then you're good to go.
You said you go all the time.
You basically said, yeah, that's it. Okay, we're ending the podcast right now.
That's it. 1, 2, 3. You should.
No. I would advise them to just first start with the basics and start mastering market structure and liquidity. If you can master those two things, then I think you're already ahead of 95% of the people, because 95% of the people, they simply don't understand the correct manner to read market structure and liquidity. So I would advise people to start simply with those two things, and then afterwards, buy the mentorship at Max and you're good to go.
Yeah.
That's basically it.
Very good. What about you, Jus?
Very hard, man. Where to start? There's so much information now out there. I think it's hard to start now. I think you just start with the basics and you burn a lot.
And what are the basics?
That depends on everyone's strategy.
Mm-hmm.
So for me, it's identify a trend. So know where it could go.
Yeah.
And that you can simplify higher time frame, lower time frame, medium time frame. Doesn't matter, but they are all trends. Even ranging is a trend.
Yeah.
So basically, to get started from your point of view, you have to study trends. That's one of the most important
There's
things.
nothing else. For me, there's nothing else.
Cool.
Makes sense, definitely.
It's a good advice actually, because there's so
Definitely.
many people always trading against the trend. It's crazy.
Yeah,
Also,
And
when
if
the
you are
psychology comes
trading
into
with the
play
trend, you are much more profitable.
trend is
And
your
that's the
friend.
that's the big difference. I saw a lot of people lose a lot of money the last months, while those were my best months, because it was very volatile, but to the downside. People all were waiting for higher levels in crypto. So if you try to long every pullback, but the trend is down, you will not make it.
But that's something like identical to crypto, right? People are always waiting for that next all-time high, and
No, but even professional traders, they expect something. I expect nothing. I have my levels.
But do they hope it, or do they expect it?
Oh, you have TA to back all your expectations. So it's you need to have your view. And I have really zero emotions in trading.
Nice.
Because with the years you lose a lot, and I learned the most out of traders from their lies. So the fake accounts, and everyone is making it, and they show you everything. And if you go deeper into it, if you study the trader, you will see what really works and what doesn't work,
Smart.
and you
Makes
use
sense.
it.
Great, man. Thanks. Lars, my man, what would your advice?
Advice first, I would ask him, do you actually want to trade? Like, do you want to trade, or do you just want to make some side hustle money? Because trading, I have never sugarcoated trading. It's one of the hardest things. I was always a disciplined guy, always went to the gym, multiple training sessions a week with kickboxing and soccer. So I was like, oh, I'm a disciplined guy. I can do that. And then risk management came, and I didn't even recognize myself in the beginning, So do you want to trade? Like, it's a commitment, because it's going to take I think for me to 4,000 to 5,000 hours until I started actually making money. I went from losing to break even to then making money good. And I think now I'm approaching the 8,000 hour mark in 5 years now. So first, talk to yourself, do you want to make this commitment? And then it's all about, in my opinion, finding a mentor. Just go online, search some stuff, maybe some smart money concepts, maybe some trend lines, and then follow people. And then maybe you'll probably not find your edge on the first try, but then at least you've tried some trend line breakouts. Maybe that's your thing that you started with, and you found a mentor, and then you kind of explore, and you're like, well, maybe this isn't for me. And then you switch, and then you see okay, maybe smart money concepts is better for me. And then always do a back check on your mentor. Very important. Don't just find a mentor. Back check Jip if you want him to be your mentor. Look at the setups. Look at the dashboard, the track record. Very important. Transparency is key, and that's very lacking in the trading world. And then if you have that edge that it's kind of working, but you're still struggling, and you don't know for sure, stick with it, because probably that's the edge that you will end up mastering if you then get your psychology in check and all that stuff. But yeah, make the commitment to yourself to start trading, find a good mentor, learn from him, and then put the hours in yourself. Because watching is not going to make you profitable. You need to watch to get the information, and then just go on the chart yourself and play around. And
Definitely.
slowly, after you put more and more hours in, you'll figure it out. It's with everything. You just need to put in the hours.
Oh, definitely. We were talking about it, of course, before the podcast. You need to feel the pain. You need to feel the loss. And anybody can tell you how it feels to get a loss. But if you really feel it, and you can attach an emotional state to it, then you definitely go further.
Yeah. We were talking about that. It's just that it's hard that I am the. Yeah, in my opinion, you have two types of people. Some people actually listen to advice and just apply the good concept taught by the teacher. I was always the type of guy that I thought I knew it better. And then I went out and I made that mistake that he told me like, yo, you're probably going to make that mistake. And then I actually learn. It's like I'm pretty stubborn in the beginning. But hey, if that's your way, then that's your way.
I think stubborn is the best thing to have in this market. Because if you follow other people, you won't make it.
Mm-hmm.
So you need to try.
Definitely. Try, get humbled, and then build back up.
Good, man.
Yeah.
Great. Max, last call for you, my man.
I think majority has already been said, but I agree with what you said perfectly. Obviously, you want to surround yourself with people that have done what you want to achieve. Very good, whether that's a community, whether that's a mentor, doesn't really matter. But you need to get experience. You need to get your hands burnt. You need to kind of make mistakes, and that's the only way that you're going to learn from it. So when you said you got to burn some money into it, that's the way to go. For me, it was 2019 Japanese flash crash, went from 3K to 30K in one night. Everything's gone. I spent a whole year building that. Yeah. It's gone, and that's just these moments, these very hard moments. You burn something, and that's what creates you. And then you start looking into this is actually something for me. But majority has already been said. Bullet points.
Definitely. Yeah, great guys. I think we had a great discussion about TA, what it is for also different type of traders and different type of trading pairs. And I think if I can summarize it, is basically like stick to it, find a very good mentor, find a community that can teach you the basics in TA, find a strategy that works for you, and then basically stick with it and keep your emotions in check. Keep your psychology in check, because that's definitely the most important. Yeah, great, gents. Thanks for attending this podcast. Hopefully, we can do it sometime soon.
Thanks for having us.
Thank you.
Great, man. Thanks, guys. I want to thank you for listening. Hopefully, you enjoyed it and you have a better understanding of TA within trading. And as always, we see you at the next one.